Hey YouTube, what's going on? It's Travis here with JT Wealth. In today's video, I'm going to talk to you guys about 3 top performing dividend stocks that can help you hedge against the big scary inflation. And all 3 of these stocks have both growth potential and consistent paying dividends to help you grow your portfolio no matter what is going on in the market. So let's get into it. Alright guys, welcome back. Thanks again for joining me. Hopefully you find something of value in today's video. Now if you don't mind, take 2 seconds out of your day, smash that like button for me, and consider subscribing to the channel if you haven't already. Now like I said, the 3 stocks we're going to talk about today offer both growth and consistent dividend payouts. So these would be fantastic stocks to add to your portfolio in November and just to hold through the long term because they are all fairly inflation resistant. Now without further ado, let's look at the article that we're talking about today. And this one came out of the Motley Fool, and it's titled 3 Inflation-Proof Dividend Stocks Begging to be Bought. And everybody knows inflation is here to stay and possibly more coming. It's a word that seems to be on everybody's mind. And for the stock market, inflationary pressures have historically tended to be something of a mixed bag, and a lot of companies struggle. But these 3 manage to do fairly well and avoid those inflationary stressors seen in a lot of big companies. And now what Motley Fool did here is this isn't just an article or a couple of stocks picked by one specific person. These aren't picked by me. This is Motley Fool putting out kind of a blast email to all of their people, so to speak, saying, hey, all of our contributors, I want you guys to look into which stocks have fantastic dividends, but also tend to ride out uncertain times like periods of massive inflation. So what you're gonna see are the 3 stocks that they picked to give you guys the best opportunity to grow your portfolio. And now the very first stock we're gonna talk about today is Broadcom, because they have a lot of demand powering this chip leader and they could definitely shoot up higher. Semiconductors make the world go round, and whether they're for mobile devices, data centers, cars, or even your refrigerator, chips are one of the critical components underpinning business and everyday life. And what you're seeing here is the tip ranks screen for Broadcom, ticker symbol AVGO, trading at about $537.48 today. Not a cheap stock by any means, but remember guys, you do have the ability to purchase fractional shares. Feel free to buy $10, $25, $50 worth of this stock, whatever you feel comfortable with. Now you're looking at 21 ratings, 19 of which, are strong buy ratings and only 2 are a hold. So we're looking at over 6% potential upside to a possible price of $570.94. So not only do you have the ability to get 2.71% dividend yield on a quarterly basis, but you can also expect 6 or more percent growth in the next 12 months if you can trust these analysts. Now, the Broadcom company has been delivering strong sales and earnings growth, and it looks to be still in the early stages of benefiting from the 5G upgrade cycle and other influential connectivity trends. The company managed to grow revenue 16% year over year in the 3rd quarter, and non-GAAP adjusted earnings per share jumped roughly 29% compared to the year prior. Not only that, but what you're looking at is the actual chart for Broadcom compared to the S&P 500 index over the last 5 years. And as you can tell, Broadcom has managed to outperform the S&P 500 while paying a higher dividend. Now, the second company we're going to talk about is one that is rapidly approaching dividend aristocrat status, and that is obviously something I'm looking at very closely when talking about dividend stocks. And that stock is Verizon. And for income investors, you always need to be on the hunt for up-and-coming dividend aristocrats, and that is exactly what Verizon is. Somebody that have a 25-year history of paying and raising their dividends annually. Now, at the moment, this selective list only includes 65 stocks, which shows how difficult it is to grow to the market cap necessary and raise your payouts to your shareholders that consistently. Well, Verizon is well on its way. Last month, the company announced a dividend increase to $2.56 annually. That's its 15th consecutive year of raises. And the payout is well supported by the company's cash flow. And as you can see here from the TipRank site, they're trading at $52.57 right now. Ticker symbol is VZ. They have 7 ratings for a moderate buy with 2 buys and 5 holds. But look at that upside potential, 13% plus to a 59.43 trade roughly in the next 12 months. So that's twice the upside potential of Broadcom. Plus, you are getting consistent, 15 years now, consistent dividend payouts. Now, Verizon brings you a fantastic dividend of 4.83% paid out quarterly. Plus, you've got the possibility to earn 13% growth potential in the next 12 months. And it's a fairly affordable stock, guys. So one I would definitely keep on your radar. Now, if you happen to be the type of investor that likes to buy the dip, Verizon stock is underperforming the market right now, and shares are down 9% year to date. So this is an opportunity to get into the Verizon stock at a very affordable price. So with Verizon, you have the opportunity to buy a stock at 9% lower than it could be, with a dividend 3 times that of the average market index. All right, guys, the third stock we're talking about today is Brookfield Infrastructure. And this company is about as inflation-proof as it gets. They are a rare top-tier business that can raise prices with inflation, but their underlying costs don't necessarily move up at the same rate. Now that's powerful, especially for dividend stocks. Now, Brookfield Infrastructure is basically a toll booth business. They operate infrastructure assets that move goods, people, data, and energy. Also, they are traded on the New York Stock Exchange under both tickers BIP and BIPC. Here you can see the ticker for BIP trading at 58.57, strong buy with 6 ratings and 6.21% potential upside in the next 12 months. Also, you've got BIPC trading at 62.45, only 1 rating with a moderate buy and a 12% upside potential to trade at possibly $70 in the next 12 months. Now, one of the good things as far as this company goes for dividend investors is that a lot of its operating units have inflation escalators built into their contracts. That means they can boost their revenue and cash flow even when their expenses don't get any higher. In the second quarter earnings release, for example, the word inflation was used 5 times. In all 5 cases, inflation was a positive for its results. And Brookfield is one of the safest dividend stocks you can be looking at. Right now, based on the price of the stock, their dividend yield is about 3.4%. And they have a goal to increase their dividend payout by 5% each year. And they are having no problems making that goal. So there you have it, guys. Those are the 3 top dividend stocks we're talking about today that can definitely help you beat inflation and continue to grow your account no matter what the market is doing. You've got the possibility to grow the stocks based on the growth of the company, as well as consistent, constant dividend payouts quarterly to your account that you can use the drip function or dividend reinvesting plan to continue to grow and compound your money year after year. But as always, remember this video, as all of my videos, are only provided for information and entertainment purposes only. I am not a financial advisor and I'm not telling you to buy or sell any equity at all. And of course, if you made it this far, guys, don't forget to smash the like button for me. Consider subscribing to the channel if you haven't already. And until next time, guys, bottoms up.